So here's the most recent news from the Gamestop saga that happened, and with Robinhood limiting trades for retail investors. According to Yahoo Finance, Citadel CEO Len Griffith said that we had no role in Robinhood's decision to limit trading in GameStop. But what's going on is that skeptics of the role that Citadel played GameStop trading frenzy can expect the hedge fund CEO to flatly deny that the firm had any role to Robinhood's decisions to halt trading during testimony. And he said that I want to be perfectly clear, we had no role in Robinhood's decision to limit trading in GameStop or any other of the meme stocks. Okay. And what else is going on is that what the SEC is looking into now is that perhaps many brokers charge market makers a set fee to execute retail trades, a long-standing transparent thing. And on Thursday, Roaring Kitty, along with CEOs of Melvin Capital Management, Reddit, and Robinhood. Wow. So some exciting stuff happening, but this is the news from Yahoo Finance right here about market manipulation. That's what SEC is going to go over.
Well, the SEC now saying it is assessing the situation and reviewing activities in light of the wild swings we've seen in the market from the retail trade over the last few days. Let's bring in Alexis Keenan, who is tracking that part of the story for us. Alexis, we've got a statement from the SEC, but I think the larger question right now is, what's the next step in terms of regulation?
Still a huge question, Akiko. Now, legal experts that I've been talking to in this field say there should be no surprise if the SEC does pursue some sort of regulatory or legal action against the buyers who bought stock to drive up the price and squeeze those short sellers. That's because the language of the securities laws is really vague, and it gives regulators very wide latitude to form a case, basically. So under Section 10B of the securities laws, aside from some very specific activities, you have two types of actions that are really illegal. One is securities fraud, and two is manipulation. Now, fraud doesn't really fit this case here, so regulators are probably going to be stuck with that manipulation prong. And the agency does like to prosecute these high-profile cases, and especially those that appear to be undermining the market. But the problem for the SEC, if it's the one to go after, and it would likely be the body that goes after these buyers here, if the buyers engage in manipulation, or if that's what's alleged, there's no clear definition at all in the statutes to say what exactly that is. This is all based on case law, so it's all on a case-by-case basis. Now, in the past, regulators have had some success when they've shown that buyers have agreed in concert collectively to trade only to move the stock price and not based on market fundamentals. But for these GameStop buyers, the argument's really tough because manipulation, it involves deception. And for those participants who were buying and possibly participating in those chat boards on Reddit or otherwise, they were taking those actions really out in the open. They weren't deceiving anybody. It's been widely reported in the news. We've been talking about it all day. And so it starts to become more and more difficult, aside from that very beginning stage.
So that's the thing. It's going to be interesting to see how many people are going to be involved in this if they do go forward with SEC charging it as a price manipulation, because the fact is this was a price manipulation, whether you agree or not. So we'll just see as time progresses.